Good evening, I'm Giuseppe Basile, I'm the NSN trader. You can find at the website www.fibstalker.com. I also post regularly on Twitter using the fibstalker nickname. Good evening, today is Sunday, June the 29th. Actually, it's Monday already. It's 30 minutes past midnight in Toronto, and in this video I'm going to review for you 5 markets. The pound versus the US dollar, the Australian dollar versus the US dollar, the US dollar versus the Canadian dollar, and the New Zealand dollar versus the US dollar. And recently, just for a follower, I've added the euro versus the Swiss franc. So very quickly. So I'm starting from the weekly time frame of the pound versus US dollar, and as you can see in this market, we are now hitting an area of resistance that worked very well back in 2009, and we got some participation here in correspondence of this 168.44, but then eventually price continued higher, and it's now putting in jeopardy this area, this level of failure. However, we also have to keep in mind that the most powerful level will be the 173.38, which is going to be the all the way halfway back from the highs into the all-time highs in 2007. So this is what we have in the weekly time frame. So the market is into a resistance area on the weekly time frame. On the daily time frame, it's following a nice sequence of measured move here, and I'll just focus on the last few days here. Congratulations to those who took this trade on the day. This was the highs to highs, which I gave with 1 day in advance here. And as you can see, there was participation at this 169.27, and you didn't have to be worried about putting a stop below 169.06 here, because by studying the sequence of measured move, applying the fib stalking technique on the 15 minutes, you would have spotted the level at which program trading actually broke the sequence of measured move on the 15 minutes. And as you can see, after that happened, this was a very good 4 to 5 reward to this trade into 170.48, and the market came again into the next measured move in the sequence, trades from the same high to new high, and as you can see again, we saw participation at this level. So this pattern are very powerful, and the reason for that is they are backed by program trading, a powerful class of algorithmic trading. And again, we got a free risk trade here, and target is above. The first target is going to be at this 171.11. So if the market comes back, this level 169.53 could offer support again for a continuation higher, but the price could just continue higher. And if we get a retracement at the beginning of the week into the all the way halfway back here, this 170.13 level, if you didn't enter here, this might offer another entry into the 170.74, which helps into the 171.11 larger target on the daily. Of course, if price moves below 169.88, there is a possibility for a retest of this 169.53, and a violation of, on the other side, of 169.27 would actually make us consider the all the way halfway back. So at the moment, this support long at 169 is well formed, and so this is what I'm going to follow at the moment. So moving to the Australian dollar versus the US dollar daily time frame. On this daily time frame, we had in this market, you have to remember that the sequence of measured move higher failed after we broke the all the way halfway back from the highs we saw in October to the lows we saw in January. And typically when that happens, I was waiting for a retracement into the all the way halfway back long here for a continuation higher or a test of this level. And this didn't happen just yet. What the market did, continued higher at the moment, and 2 weeks ago I was able to identify in advance a potential level of support. The market actually bounced at that support after violating the sequence of measure move lower here, and this level of support has target above, and the targets are above previous highs into this 0.9485 level here, and that's where we could see this market. If the market goes back, we have always to remember that there's another level here that has not been tested, but it's sorry, it's the level that has been tested already. That's the all the way halfway back. So excuse me, let me make a correction here, because this is the level that we have to consider, and this has a different target. The target is 0.9491. so if the market gets back into this level, this could be in jeopardy, but the market at the moment is showing just a continuation high. So the 0.9493 is the level that you have to consider if you are in this long. Moving to the US dollar versus the Canadian dollars, congratulations to those who took a trade I gave now at the beginning of the first few days of June here. This was a retracement, but in this market I want to show you also the weekly time frame, and this was a very good indication of how powerful is the class of algorithms on this market. As we can see, the 112.40 was the level, the resistance level from identified as the 50% retracement from highs to lows here, and as you can see, this level worked very well. And longs, extension longs here, they tried to keep the market up, and as we can see here, after testing this area of 112, the market went right into this 109.18, and I call this with a few weeks, 2 weeks in advance here. The market then moved higher, and again saw selling into the 112.40, and the market came again into this area and eventually failed this area. And that was a confirmation that this area of support now was gone and the shorts were in place. So I provided all these levels, and I also mentioned the fact that we could see now this market retracing all the way into this 103.43. How are we going to get there? Well, on the daily time frame, there was a sequence of measure move. Initially, it was an extension, and then within that extension, there was a traditional measure move. As you can see, this extension brought price into target, and also the inner measure move brought price into second target. The inner measure move was a measure move short at this 109.32, and as you can see, there's a cluster of profit taking levels here. So what is likely to happen here is that this market is going to retrace, and there are two levels we have to watch. The first level is the inner measure move here. They're very close, but the market could actually stop at 107.38, and I believe we are going to get a retracement at least into that level. If that level does not hold, or the 107.56 does not hold, then the other level we have to consider is just above that. So the here the 107.83 level looks like a very good level for stop, and we will see the market retrace higher into one of these two levels. Now we don't have to guess. We can always use the fib stalking technique, which is a technique that allows you to test level of resistance and support in a procedural way. So there's no need to put money at risk here. We're going to see a retracement into at least 107.38 in this market, maybe 107.59, and after that we see how the market behaves, and if the sequence of measure move on the smaller time frame, 4 hours or 15 minutes, the sequence higher fails. Moving to the New Zealand dollar versus the US dollar, this is a market that gave me very good trades in the last few months, basically since February, and on the weekly time frame, it's evident this area of support 177.09, which identified last year actually, and I also have identified an area of support that worked very well and brought price to first target. So this market on the weekly time frame is showing a sequence of measure move. Look at how beautiful this 181.14 worked. This is an area of support which worked very well 3 times, and was able to bring price right at that first level. We saw some profit taking. Eventually the market went higher, and then on the weekly time frame clearly went to trade into the next measure move, and there was participation at the level, and the market is now already printing new highs, and it's actually moving into that first area of target again, which is going to be 189.45. So that's where I am waiting. I'm looking for this market to move into on the weekly time frame. On the on this daily time frame, we got initially a retracement, 50% trade here, 084.78, bringing price into first and second target, and I mentioned this trade as well. We got a gap, and I mentioned the fact that I would not use this this anchor here, but I would use the low of that day. And in fact, when we trace from lows to highs, we had participation again at this level twice, and eventually price went into the first target. The next measure move also traded and brought price into the first target, and that was from highs to highs here, and you can see there was again participation at this level, and these two trade could be could actually be timed using the fib stalking technique. We are seeing some profit taking at this level, so if this profit taking continues, the next level of support for this market is going to be the next 086.92. So this market retraces quite a lot, as it happened in the month of March to beginning of May here. So that's something that can be expected for this market. Finally, I want to close with the euro versus this the Swiss franc here. And as you can see, this market is still pegged to the euro. This currency is still pegged to the euro. It's not really a very interesting market to trade on the weekly time frame. It does not move a lot. However, when we look at the daily, we still see some interesting swings, and you will remember that a couple of weeks ago now I've indicated a sequence of measured move which is active here, and this would be from highs to lows with participation at 121.95, which brought price right into that first target. As you can see here, these levels work extremely well, and there was profit taking at this level, which brought price into higher level, and eventually then those higher level corresponded to new shorts here. So this market is at the moment still trading shorts, and the next level of support is going to come at 121.40. Sorry, this is not a level of support, this is a level of profit taking. There's no support under this price, and there is a possibility that the next support is around this previous lows at 120. So we have to see what happens, and probably this market is going to invert when the sequence of measure move fails, lower fails. So at the moment it's still active, and 121.40 is the level that we have to respect. This is it for this third video. Thank you very much for watching these videos. These 3 videos are part of my newsletter. I distribute my newsletter to my subscribers. If you want to receive the newsletter, just go to www.fibstalker.com and subscribe for free. The newsletter, I hate spam as much as you do, and I will only use your email to send out the newsletter. Thank you very much for your attention, and bye bye now. Happy trading.